GM. Welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that stablecoins are going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3.
I completely agree. It's funny. Stablecoins is the thing I think is probably going to not change the world the most, but probably have a massive, massive impact in the coming just like few short years. Right. So I think this is a big deal and I'm excited to talk about it today.
Yeah, I get to have fun with the intro every time and mix up with that, what is going to change the world. But today is the one, you're right, where it's probably our strongest belief
Yeah.
and thesis for the growth of crypto and blockchain. So let's set some context, Kai, before we jump in to discussing why we need stable coins and why we believe they're going to grow to a billion people. Where are we at right now?
And also how you can capitalize on the
Oh,
opportunity of
yeah.
stablecoins. Obviously, stablecoins don't go up and down. There's not much you can make in stablecoins unless you hold them when prices are going down, then you're doing all right. But in a bull run, in any run, how can you make money because of stablecoins? We'll talk about that as well at the end. So make sure you stick around for that.
That's a great point because I feel like most people probably don't know how to do that. So we'll make sure you know. Okay, so size of stablecoin. In 2022, stablecoins settled over $11 trillion on chain. This is over 10 times the amount that PayPal settled in 2022.
Wow.
And it's just below the amount that Visa did in volume. Visa did 11.6 trillion in 2022. I've heard though, so far this year, stablecoins are ahead of Visa now. So
That's
huge volumes. And what's remarkable is this has only been a few years,
That's what I
right?
was going to say. Since like
Like
what,
it's been this
2019,
is
maybe?
it's I think 5 years, maybe. Incredible growth for a new global money movement system. Over 25 million blockchain addresses hold at least $1 in stablecoins. In comparison with traditional finance, a US bank with 25 million accounts would rank as the fifth largest in number of accounts in the US.
Wow. It's a big deal.
Approximately 5 million blockchain addresses send stablecoins every week.
Wow.
5
5
million
million active
people
users.
using it every week. So it's not
Now, to
just
be
a
fair,
few
it's
people
not
holding it.
humans though. That's not unique humans. That's unique wallets, and probably some are bots, but like gives you a good idea of the numbers. That's interesting.
Yeah, yeah.
Pretty big.
The supply of stablecoins has grown. Oh, here's the number. From 5 years ago, it was 3 billion was the total supply of stablecoins to over 120 billion today. And
Wow.
it actually reached 160 billion previously.
Wow. It's impressive.
Now, unfortunately, we can't have an episode around stablecoins without mentioning the collapse of Terra Luna. So that happened back in May 2022, and nearly 60 billion was
Erased.
evaporated basically from the markets as a result of that, which is part of what we'll talk about why stablecoins has not maybe moved as fast because there was that black mark on them. Got to mention PayPal. We mentioned PayPal earlier that it's being dwarfed by stablecoins. Well, those guys aren't idiots. They're seeing that. So they launched their own stablecoin, PYUSD. And let's remember, PayPal has 70 billion market cap as a public company and over 420 million active users. And they just launched that stablecoin. So it's all new. And the market, current predictions of the market for stablecoins will grow to trillions of dollars of supply and hundreds of trillions of dollars in transaction value in the coming years as a result of more people seeing what we're going to talk about today.
Yeah, I think for those that don't get it, stablecoins are probably going to be the thing that onboards the most people into this space. Everyone guesses gaming. And you know what? Maybe it still is. Like if a viral game comes in the next few years, it might kick stablecoins ass. But I don't know. If the UX, we'll talk about it, but if the UX gets to where I think it will the next year or two, stablecoins takes over. It's so inevitable.
Mhm.
Like it's a guarantee that stablecoins will be the future of how we use money. How fast that happens, I'm unsure. But like I mean, these numbers are massive and it's only been 5. So we're reaching that inflection point. So it's now's the time to be talking about them and also the time to be figuring out how to capitalize on that opportunity.
There's also a hot story right now around MakerDAO, Vitalik, and Solana. We're not going to break that down in this episode, but on Wednesday, tomorrow, we got a newsletter coming out on Paragraph. Make sure you check out that newsletter. You can learn all about that hot news and you can collect our newsletter on Paragraph. Let's take a minute to hear more about them. Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. Welcome back. Okay, Kai, we're talking everything stablecoins. Let's start off, as we always do, as marketers and business owners. There's always a problem that a big product is going to solve. Why do we need stablecoins?
Yeah, so stablecoins are, I mean, if for those that have been in crypto for a while and have had this like sort of dream of, crypto kind of being the new financial system, a lot of people are like, yeah, what do we need stablecoins for? Right? It's just fiat money. So what's the point? It still inflates away. And so a lot of people are like, well, Bitcoin or ETH are going to be the new money, which, because that separates itself from the state, it's not controlled by anyone, it's not being inflated away, et cetera, which like, yes, you're right. I do think that is a very valuable thing to have, just like we have gold. But with gold, we also have fiat money. They both exist and they both have different use cases. And I think, well, maybe 20, 30, 40, 50 years from now, we might use something like Bitcoin or ETH as like pure money. And that's the thing we'll buy our coffees with and things like that. I don't see that as being the future or like the near future, right? And I mean, near futures in like 10 years, 20 years, I don't even think that that's the case. Even like you got like El Salvador using, Lightning Network and trying to make that a thing, it to me doesn't make any sense. And the reason is our world works in fiat currency. And that's not something that changes super quickly, especially because you have Bitcoin that goes up and down like, 80% in a year. That's just, that makes no sense, right? You have people all over the world, like Argentina, Turkey, where their currencies are going up or down that much versus like the US dollar, and they're fleeing from it. It's the last thing they want, right? And so again, I'm not saying that people are fleeing from Bitcoin or fleeing from ETH. Absolutely not. Of course, they want to hold on to that stuff because it appreciates over time, but it's not the thing that they're necessarily going to spend in. It's hard to price a pair of jeans or a coffee in something that is that volatile. And so the world still is in fiat, and we probably are going to do that for a long time. Now, what's interesting though is stablecoins, which is taking fiat and putting it on chain, has a lot of benefits to it. It is a 10x improvement on the way that money is used currently, right? And so I think it's it's an easy transition. Look, long term, I think we do go to some other asset that is not fiat based, becomes the main source of money. But I think we're a far, far, far away from that. Like, what did we say? There's like, I don't know, 20 million people max that are on chain right now. And it's not even that. Like, there's no way it's that. So like, no, we're not going the whole world using ETH, or Bitcoin. It just doesn't make any sense. And so stablecoins is a natural fit. And it seems like it's a natural fit because it just solves a lot of problems for the existing world while not changing too much for merchants or for just normal users. Stablecoins are an easy app that our parents will use. We always talk about, well, will my mom use this? How will something go mainstream? Most things on chain are not going mainstream. Stablecoins, very easy because no one knows that it'll be a stablecoin versus just a normal US dollar, right? You have no idea in terms of when the apps are set up properly. Like, for example, those using PayPal, right? PayPal's very easy UX. Once you're using just stablecoins on there, you won't know the difference. But PayPal will use stablecoins for a few reasons, which we'll get into. So there's kind of three big reasons why I think stablecoins are basically inevitable. Inevitable, sorry. The first is, let's see, where do we go with this? The first is there's a lot of people that just don't have banks or are underbanked. They don't have access to digital fiat currency. Unfortunately, they don't have access to a way to store their money. And so stablecoins is an easy way to do that. Anyone can get a bank. You just make a MetaMask wallet, a Coinbase wallet. Anyone in the world can do that. Takes a second or two, and all of a sudden someone from around the world can send you money and it's in dollar form. So there's one way. And then you can go and take loans out against it. You can do financial things with it that people in India and, other parts of the world, Africa, et cetera, can't really do. So like there's one. Now for us in the US, for us in Canada and Europe, we don't get that. Maybe we do, but for the most part, we don't. And so that's actually the fastest growing area of on-chain stuff right now is places like Africa, India, et cetera, because they don't have any other option. So that's the easy one. It's a win for them because they don't have another option. Now we do in Canada and US. And so why does this make a big difference for us? Well, the other thing is in terms of merchants. So as a consumer, like a user, I just use my credit card, right? Or my debit card or cash, whatever. And it's very easy and normal to me. For a merchant, though, it's very costly for them to accept credit card payments, especially on smaller payments, right? Think of like when you buy I don't know, a chocolate bar or whatever, it's taking up a good like quarter of those revenues just on like Stripe or credit, like your Visa payment or whatever, right? So convenience stores actually don't make any money on you doing that. Like coffee shops don't like when you come and you just buy a coffee and use credit card. They don't make any money on that. They are hoping that you're going to buy a coffee and some donuts or a sandwich or something so they can actually make some money. So once we get to the point where stable coins are just the thing that's backing your credit card, all merchants are going to go that way because they can make and save so much money by doing that. So that's like an inevitable thing once the UX is good enough, which we'll talk about. And then the last thing is obviously inflation, right? So you've got places like Argentina where their currencies are inflating at like 50% a month, which is insane. And they want US dollars. They don't care if it's a stable coin, if it's cash, if it's whatever. They're just like, just give me a US dollar. Turkey, same thing. Lebanon, same thing. Like many countries are doing this. And it's hard, like in Argentina, for example, they're not allowed to have US dollars, or there's like certain ways you have to do it. It's very expensive to switch into it. And so stablecoins make that it's permissionless, right? It's free to do it and they can't stop you from doing it. You just go make a MetaMask wallet and anyone can send you your US dollars. And so whether that's payments from a company, it's, remittances from people that live in the US that want to send their family money back into, Argentina or Africa, whatever. Stablecoins just make that so much easier and so much cheaper. And so I think those are the three big things. One is just banking the unbanked. Two is just fleeing inflating currencies and reducing a ton of fees on remittances. And the third one is just for merchants. And this is in the US, in Canada, et cetera. I mean, I was at Port Stanley, which is like a beach town near London, where I'm from. And there was a sign on the table and it was like, you can pay with credit card, but we really, really prefer that you don't. And they're like, we actually have an ATM machine on site that has zero fees. And we hope that you'll go use that and pay our staff in cash because we save money. And then also they make more money with their tip. So I was like, okay, fine. I went and did that for them. I was like, man, stablecoins is just going to change this for sure. So those are the three big reasons why I think stablecoins are just a no brainer of an innovation. We're not quite there yet for it all, but I think it's coming really fast, as Jay just alluded to with all the growth and stats that he just said.
I think the thing that's important to remember too is if we go back to the start of the internet, we've solved a lot of problems with the online world. And we like to compare the online world to the on chain world. If you think about first, we brought all the knowledge and information in the world online. And as a result, we made it frictionless to access knowledge and information. We made it cross border and we made it instant that anybody could do that from anywhere in the world, which led to incredible economic gains, incredible better life for a lot of people in the world, right?
For those that are not putting this together, like pre-internet, you had to use books to get
Yeah,
information. And so you only had the books that were in your country. And a lot of times, especially in some countries, they won't bring in certain books from other countries because they don't want you to know the histories there. And so that was your only source of information, which is not a great one, it's not like super scalable and it's stuck to whatever's just in the library of your city or town, right?
exactly. In the same way, after the internet brought all of the knowledge and information of the world online, we then brought all of the stores online and all of the products online with
Mhm.
e-commerce. So now you could buy any good from anywhere in the world instantly. You didn't have to be limited to what your local mall or local retail stores provided, right? Now it became e-commerce became global, right? Also, with social media, communication became global. In the past, if you wanted to speak to somebody, you had to pick up your phone and call them. And if they were outside of your country, if you were going cross border, well, you had to pay very high fees, unless I guess maybe Skype sort of came along and was the first disruptor to that. But there was a lot of fees associated with contacting people outside of your country. And social media came along and said, no, we're going to allow sharing and contacting of each other instantly, frictionless, cross border, right? So we've solved some of our major issues with access to knowledge, access to each other through communication, and access to goods and services, all done online. But money has stayed in the past, where still today, if I want to send money to Kyle, right, I can do that because we're in the same country, but it's has fees associated with it, and it's instant to a degree, right? But not
Sort of, yeah. Takes a few minutes in Canada. But to go
sort of,
across
right?
country, it takes forever.
Right, exactly. So money is still very difficult to send within your own country, it's easier. But if you try to go cross border with money, it's good luck.
Expensive, slow.
Yeah.
It's actually funny that you just said the internet took communication and made it seamless, frictionless in cross-border. It's funny to think of talking cross-border, but it's true. Now we think of talking, buying things like commerce and knowledge. We don't even think about cross-border. It's not even something you even think about when you're doing it
No.
because it's so natural. But money, we still do. And I think what stablecoins does is it removes that whole cross-border thing. You won't even, in a few years from now, you won't even think about the difference of sending some money in your own country to another country, there will be no difference, which right now there is a big difference, right?
Yeah.
It's a big challenge, even because you got to flip into currencies, even that will become very seamless and frictionless, right? Which is kind of interesting to think about. And I think hard to wrap your head around.
We're going to talk about apps, but it will most likely within 10 years, probably sooner. Kai will say it's going to be sooner than this, but I'll go conservative and say it's within 10. You will be able to, from your phone, send money to anybody in the world instantly with low fees using stablecoins.
I think what will happen is so first of all, a lot of fintech companies are now beginning to build on top of stablecoins. PayPal obviously is one, but there's going to be a wave of this led by USDC and their regulatory stuff that they're having with Coinbase and USDC kind of leading the way here, Circle leading the way here. I think we're going to see a ton of innovation here. What's going to happen is for anyone that's used PayPal, if you are in the US, PayPal or Venmo are extremely seamless. You just have a person's name and you just click and send. And it's so simple, right? You don't think about fees because it costs you nothing. You don't think about anything. It's all immediate. Now, that doesn't work when you go to different countries because some countries don't have PayPal. And then you have to get into different currencies and it becomes a little like not the greatest. Like PayPal in Canada kind of sucks. It's
Mhm.
really just good in the US. Same with Venmo. It doesn't even exist in Canada. And it's kind of like for the Europeans listening, it's like Revolut in Europe. It's a great app. You guys all love it in Europe. In Canada, I'm like, well, it doesn't work for me, right? So it still doesn't really solve that problem when you're going from country to country. And I think what will happen is we'll have apps just like PayPal or Revolut that will feel and look just like that, but it'll be for the whole world. It won't be for just one country. Maybe that's what like the Twitter
I
X,
was just gonna say that's Twitter
yeah,
X,
everything
man.
else. I think that's where it goes. I think that X and Telegram and these apps, whichever ones are really in the know, are going to build these and they're going to become the PayPal, which is just like global, which is going to just be insane. Because for anyone who's traveled or does business in other countries, like this is a massive, massive problem. Or for anyone who lives in a country that's not the US, it's a massive problem, right?
Mhm.
Especially trying to get US dollars, which most countries want and need. And so stablecoins just completely fix that. And once that UX gets, perfect.
Well, and not only is it a problem on the user and the retail and just as consumers, it's a problem on the enterprise and as well when you have businesses which are spending billions of dollars every year globally
Mhm.
because commerce is global now. So you're a large American business, there's a good chance that a lot of your goods are coming from China. Well, think about your finance department and your accounting team and the trouble that they have to go through to pay all their invoices and to deal with all of these vendors all around the world.
The industry of transferring money, there's hundreds of billions of dollars made every single year just on the cost to transition from one currency to another, right? Those extra fees that are on that, which is like, 3% is what my bank takes every time I want to switch from Canadian to the US. Why? What do they like? What is the
There's
reason
no
for that?
service that they provide there.
Yeah, they don't do anything. So that's ridiculous. Then the like tapping your credit card or paying for anything, which everyone does in every country around the world. Again, Visa, MasterCard take 1 to 3% on all of those. Hundreds of billions of dollars coming there. Again, doing nothing for the most part. And remittances, you think of like Western Union, all these other ones, just sending money from one country to the next. They take 20% or whatever. Like there's so much money being made for creating zero value,
Yeah.
essentially. Right.
Yeah. Well, and it's also I'm trying to think of an analogy right now, but it's like it's handicapping all of our abilities to build and connect
Right.
around the
Yeah.
world. So we don't notice this yet. And especially you've mentioned this already, Kai, especially in G7 countries, leading developed countries, we don't have this problem as much, which is why we don't use stable coins as much unless you're trying to interact with people in other countries. But once you turn on that faucet, maybe more so allow stuff to move through the pipes easier. What that does to think about an entrepreneur who wants to start a business somewhere in the world and doesn't have access to capital. Well, how do they get access to money? Well, they need some way to raise capital. Boom, stable coins. Like there's so much. I think that we don't even realize the power of if we get to a billion users with stablecoins, maybe I should say when, what that will allow in terms of economic development, the ripple effect of that.
It's going to be absolutely massive, I think, because everything's segmented right now. The world is all segmented because of these different currencies. And once everything goes on chain, it's like it just like puts money on steroids and it can just move freely and so easily to anywhere in the world. And these borders that we think of become no longer existent for money. They're borders still physically, but those borders leave us. And anyone, I mean, we'll probably all use the US dollar. If the US figures this out, if the US listens to this podcast episode right now, they might go, oh shit, they're talking about getting the US dollar all over the world seamlessly and just letting it
Yeah.
flow around. Like, what a great idea. Right now, they're like, no, we need to get rid of this whole thing. And it's like, what? And that's just going to change the world completely if that happens, which I think it will, as long as the US doesn't fuck that up.
What is stopping us from getting to a billion people on stablecoins, Kai?
Yeah, I would say there's like probably two main things. The first one I would consider like regulatory slash just like sentiment around the stuff, but probably more regulatory. And the reason I say that is again, most of this is US dollars. Yes, there's like Euro stable coins, there's a Canadian stable coin, but like no one uses them. They don't have meaningful adoption and they don't really have any reason to for the most part. And so you kind of need the US to be on board with this because the way stablecoins work is you take real fiat money, you put it in a bank, which is in the US, and then you mint something on chain and now it's on chain. So it's free and cheap and settles immediately. That's the whole idea of the tech, but there's still fiat money there. So meaning you need some regulation and some safety around that. And people are still currently scared. I would say it's probably not necessarily people, it's more businesses, right? You don't have big companies around the world currently using stablecoins because they don't have regulatory clarity. And they also have the issues of like Terra Luna blowing up, the issues with like, was it the SEC or whoever was suing Binance over like BUSD and whatever. So like, it's a bit of a shit show. And so you have that problem, which I think is getting fixed and probably will get fixed relatively soon. So that's one big problem. Users don't really care. Like you see a ton of adoption in Latin America and in Africa because they're like, whatever, I don't give a shit. I'm just going to use this stuff anyway because it's just a 10x on the innovation, right? Like
Mhm.
it's way better than their alternative. So I don't think that's really holding back the people. What's holding back the people right now is the UX of it all. What's interesting though is like the UX is actually way better than the traditional way to access US digital dollars because right now you need a bank account, which means you've got to go physically somewhere. You've got to KYC, you got to have like documentation. You've got to like usually share your social insurance number and sign some documents and blah, 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 blah. Right. Which is a pain. And then it's like that works in your country. And then it's like, it's not that great. It's actually terrible. If you ever, like, I hate going to my bank. It's the worst UX. Whereas like downloading a MetaMask Coinbase wallet takes 20 seconds and then you write down your 24 words and boom, you're in the system. And so like, it's actually a way better UX.
Mhm.
The world just doesn't understand that yet. At least not again in US, in Europe, in Canada, etc. And for us, it's somewhat easy to use a bank and we've just all done it. So that's just normal. We don't have a reason to go off the other way yet. Whereas like obviously places in India and Latin America that just don't have banks, there it's a no-brainer for them. So I do think as the UX improves, and by UX I mean like sure the wallet experience improves, more people will use it, especially in, Africa and India, et cetera. But I think in terms of the UX of stablecoins being integrated into apps like PayPal, like Revolut, like, just whatever else we're using. Once we have the ability to like the problem right now in the US, Canada, Europe, et cetera, is like I just have a credit card and I can tap that on anything and it works all around the world for the most part. And that just takes my money and it works, right? It's hard to get me to move off that. Now, when the same thing happens where I can take a credit card and I can just pay with that credit card and instead it's using stable coins and I'm not having to pay 1 to 3% to my bank to switch currencies and all that. Okay, I'm going to use that easily. And most people are going to start to use that. They won't use it because it's a stable coin. They'll use it because they save 3% on all their transactions, right? And then also merchants will want that because they save a shit ton of money. And so they'll start marketing it. They'll start preferring it. They'll start asking for it. And they might even start not using the alternative and only using that. So that's when this thing becomes completely inevitable and everyone uses it is when the UX of using stablecoins becomes the same as using just normal fiat money, which is coming very soon. And I think will happen in the next, I mean, we already have that. Was it called Gnosis Pay and Solana Pay even, which
Mhm.
are basically just tap your phone and boom, it's done. So like those kind of things are going to make this super, super, super seamless. And those are already happening. Now they're new. So like we need some time and not all merchants use that, but like Solana Pay just got integrated into Shopify, right? Gnosis Pay probably will be next. Why not? And Gnosis Pay is direct from custodial wallet, right? As a credit or it's a debit card, I guess, but same kind of thing. So like when those happen, or like we just mentioned, Twitter and X starts to allow you to like message money. You instead of using e-transfer or even going to a PayPal, you just do it in the apps you're already using, like Instagram or Twitter, and you just text and say, send $100 to Jay, and that's powered by stablecoins. Like then we're all using it. And it
Well, and
just
I think
makes
that like it's important to remember that the reason that is possible will be, I mean, it is possible right now, but is because of interoperability and composability. And that is why stablecoins will get us to a billion people first, but also why I think we're going to see this exponential rise that
Mhm.
we're currently already on, but that is not going to stop because it will be so easy. If you're an app like Twitter and you wanted to enable sending of money,
Payments.
good
You're
using
not using
fiat,
fiat.
good
Yeah, there's
good
just
fucking
no
luck,
way. Yeah. Like
like
PayPal has spent 40 years or 50 years in business trying to get the licenses and figuring all that. And it's
Yeah.
still a bitch for them, right? Now they've mastered, of course, 'cause they've been around for so long, but now like think of Twitter trying to go and compete with that. They're not gonna be able to do that, but they can if they use stable coins, right? So it's easy. And I mean, even PayPal, who's been doing it for forever, is already moving to stable coins as well, right?
Mm.
So of course that's where we're gonna go.
Yeah. The one thing, just to go back to regulation, that I want to mention quickly is it is interesting. I was reading a report recently out of the recent G20, and they were talking about how there's a lot of conversation around crypto within the G20, and for the most part, they're on the same page. They all agree. But the one thing that they're seeing that they don't agree on is stable coins, because there is such a difference between developed countries versus emerging markets. And emerging markets don't favor stable coins because it devalues their own currency. Because if you're Argentina, it's the same way Argentina doesn't want too many people to have US dollars, because if too many people have US dollars, then the Argentinian peso basically becomes useless. And the powers want the Argentinian peso to still be useful, because
Powers in Argentina, right?
that's what their
Yeah.
reserve is. So there is this in the developed world, there might be, I mean, you can't stop it, right? It's non-custodial. So what are you going to do unless you're going to, like, I don't know, shut down on-chain access within your country or
I
something
never
like that?
thought about that. The consequences of this, like, for sure, this is happening.
Yeah.
But the consequences, I mean, already I think the US is 80% of all transactions around the globally occur in US dollars. That goes like parabolic
Yeah.
close to 100% if this, at least digital transactions will go this way if they all are this a stable coin in US dollars. Yeah, that's very interesting. It does give a lot more power to US. That's for sure.
Mhm.
Now, I think it's fine because in the long run, we have the solution, which is things like ETH and Bitcoin, which will be the like eventual currencies. But we have this transition period, which is going to take 10, 20, 30 years, where I think stablecoins will be that solution for sure.
Yeah. The other thing that I think is important to recognize is there is this, like, chicken and egg problem. Stable coins are ready to solve all these problems that we discussed, but there's just not enough people on chain. Like, if
Right.
we only have 20 million people on chain, how do we get to a billion users?
Well, but I think this is again where you have the Web3 mullet or the DeFi mullet, right? We're
Yes.
not going to get a billion users that download a MetaMask wallet on their Chrome browser. That's just never going to happen. I'm sure a billion people don't even like use Chrome. Like, I don't know how many people use Chrome, but it's not that. So we're not going to have a billion people using stablecoins from Coinbase wallet, from MetaMask, any of that. They will use stablecoins not knowing that they're using stablecoins. They will use stablecoins from fintech applications that it just looks like a US dollar. They probably won't even call it PYUSD or USDC or whatever. You actually might not even know. They might just say it's USD. Like, my guess, I don't know for sure, but like if Twitter ever was to do this, why do they need to say what the underlying stablecoin is? Like, just say it's US dollar and who cares what it is underneath. The users themselves might not care. We will, as Web3 people, we're gonna be all pissed off that it doesn't say which one. Like, well, what if I'm using USDT? I don't want to use that. Like, you know what I mean? But like eventually, I think it probably just goes as US dollars. That's it. And that's when the billion people use this and they just, again, they don't know that they're using it. It's kind of like Reddit NFTs right now, right?
Mhm.
Reddit avatars are easily the biggest thing happening in NFTs, but it's because people have no idea they're using NFTs and they signed up for it in a Web2 like way.
Mhm.
They're
Yeah.
not using a MetaMask wallet.
Okay. So I believe in the future of stablecoins. I'm stoked. I'm fired up. I want to capitalize on the opportunity. Obviously, can't invest in a stablecoin itself. It's the equivalent of investing in US dollars and buying US dollars, which is
That's,
a
that's a
deflating
big,
currency slowly.
right. But
So
that's also a store of value for a lot of people around the world.
true,
So
true.
there's a start. Use stablecoins if you're not.
How else can somebody capitalize on the opportunity?
Yeah. So check out our pro report that's coming out next week on Thursday. We're doing a whole pro report specifically on value accrual. And this, what I'm about to explain here, is essentially that every app, every use case, everything that happens on chain makes money the same way. There's value that's accruing for anyone to capitalize on. And we all can do it. And it doesn't matter what the use case is. So the way that I'm about to explain how you can capitalize on stablecoins reaching a billion users is the same as how you can capitalize on friend tech getting, I don't know, 100,000 users in 2 weeks, or Base getting however many people, or the next NFT mint, or whatever. It's all the same. And what I'm saying here is, so we understand that moving on chain is removing friction for transferring money, right? It's costly, it's slow, there's all these payments, et cetera, to do it in the normal traditional way. Moving on chain gets rid of almost all of that. Now, the reason it does that is because you're using block space. You're making transactions happen via blockchains. And to do that, there is a fee, but it's very, very small, at least on layer twos, to make all that happen, right? So whether you're using Solana or Optimism or Arbitrum or Base or whatever, every time that you transact with a stablecoin, you make a payment for a coffee, you use Solana Pay on Shopify, you use this Gnosis Pay thing to buy whatever, coffee, your rent, anything that is powered via stablecoins, there is a fee that's associated with that. Now, it might be you paying it and it's a penny to make that transaction. It might be the app like PayPal paying for it. Who cares? Who knows? Doesn't really matter. It's super cheap and irrelevant to you. But there's 20 million people or however many that have this transacting every single day, which means that that one penny or however much that fee is, when you times that by 20 people and then eventually 100 million people and then eventually a billion people, those fees really, 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 really add up. And where do those fees go? They go to the layer two that it's being transacted on, whether that's Base, Optimism, Arbitrum, whatever. And then a portion of those fees go and settle on Ethereum. And so then Ethereum takes some of that. Now, a percentage of that is burned and a percentage of that is paid to people who are staking their ETH, which means that every single transaction that happens on stablecoins, as long as it's in the Ethereum network on any layer two, an ETH holder is making money as a result of that. An ETH staker is making even more. If you just hold ETH, then every single stablecoin transaction burns a little bit of ETH, which means that your ETH is becoming a little bit more scarce. Every single stablecoin transaction ends up paying ETH stakers a little bit of money, right? A little bit of it. And so when those, right now, we're talking a very small amount of transactions. Yes, $11 trillion was in volume. That's quite a bit. How many transactions did that? I'm not sure, but it's probably in the millions, I would assume, per month. I think they're
Yep.
happening on stablecoins right now. But when a billion people are using them over the next couple of years, that goes to billions of transactions happening, right? Or I don't know if it's billions, but millions for sure, right? And that is going to generate a lot of fees, which means the L2s that it's happening on are going to generate money to those tokens. And then ETH is going to always generate a ton of money from that. We're going to burn a bunch of ETH and we're going to pay out the stakers a bunch of money for facilitating those stablecoin transactions. So even though stablecoins have no up or down, right? You can't appreciate or depreciate. They're just worth $1. If everyone's using them, there is no speculation on them. We just use them to do our daily life. And every time that happens, ETH people make money. So if you want to capitalize on $1 billion use case, or sorry, a billion person use case that has no speculation to it, it's completely sustainable. The companies that are creating stablecoins are making a shit ton of money. There's no like speculating on PFP projects and stuff. That's not sustainable. Okay. The stablecoins, of course, are. And it's generating a ton of value back to the holders of L2 tokens and ETH. And so if you want to capitalize, you just hold those tokens and you automatically make money every time something happens on stablecoins. So you can sit there and support and be proud that people are using stablecoins and you can profit from it. And that's one of the beautiful things of blockchains. You can't really do that. You couldn't really profit off the internet facilitating frictionless information around the world, right? But you can by the internet facilitating, well, not the internet, but blockchains facilitating frictionless payments around the world. And that's a huge opportunity.
Yeah. I mean, ironically, it's sort of the equivalent of investing in a bank in the TradFi world.
Yeah, kind of. You're, I guess so. Well, like investing in Circle. So that's the creator of USDC. That would be your bank version, I guess. And
Mhm.
then the blockchain is almost like investing in like Swift or
Swift.
ACH,
Yeah.
right? The protocol that's like allowing the things to happen. It's like investing in that, I guess.
Yeah. Which you've never, I think
Anyway.
it's one of the things that is core to the Web3 Academy thesis is that we've never been able to invest in protocols before because we couldn't build decentralized protocols that were owned through a token, right? We could
Mhm.
build decentralized protocols. Basically they were called open source protocols, right? That existed. But this idea of a decentralized protocol which is governed and owned through a token didn't exist until blockchain.
And this is why I'm so bullish on ETH versus something like Bitcoin. Bitcoin may or may not work out, right? Bitcoin may or may not become the global reserve currency. Maybe it does. I hope it does. I support it. You know what I mean? One day, maybe it does. Maybe it's 40 years from now. Maybe it's tomorrow. Like, I don't know, but I hope it does. But it also might not. But you know what? Stablecoins is 100% a better invention or innovation in technology than the current way that we use fiat money. So it's for sure going to happen that we use stablecoins over the normal way that we have digital dollars. And it does not matter if ETH becomes a reserve currency either. It does not matter. Either way, as long as people use stablecoins, ETH wins. That's the thing. As long as gaming becomes a thing in Web3, ETH wins. As long as DeFi becomes a thing, ETH wins. Whereas Bitcoin has to work out. It's the only way that holding Bitcoin works out. But ETH doesn't need any speculative crypto degen thing to work out at all. It just needs stablecoins, which is going to happen. That's how easy it is to invest in this space. And that's a tough thing, I think, for people to understand.
Funny to say that something is easy and tough to understand
Yeah,
all in the same sentence.
that's true. Right? Well, I mean,
It's
the internet, everyone was like, well, most people didn't get it, but it
yeah.
was quite obvious, wasn't it? Like for those that got it,
No,
same
I think
idea.
it's true though. It is both easy and tough to understand because it's easy to invest in, but can't ignore sentiment. And sentiment continues to be bad, right? There's just no way around that. There's every week there's some major headline story that just takes sentiment into the tank and we truck on. Hey, it just gives us lower prices to dollar cost average into. Kai, any final thoughts before we wrap up on stablecoins?
Yeah, I think the other interesting thing from it too is you can look on chain to see what's happening with stablecoins, right? And so you can always see the growth of these things. You can see the amount of people using them, the amount of volume that's being traded. And again, that goes back to your investment in ETH, right? Or Solana or whatever, like whatever chain it's on. And I think that one is really cool investment wise. The other part that we didn't really touch on is okay, so we already talked about how stablecoins make a way better payment, way better remittances, way better like all of the things to do with fiat money. It also unlocks something that just doesn't exist in money right now, which is programmability and interoperability, which means that when someone buys your coffee with a stablecoin, it's on chain, right? And now you can do something. We always talk about this with NFTs, how you can do things when people buy with NFTs. You could also do things when people buy with stablecoins. You cannot do that with fiat currency. And so now you not just have a better financial system, you also then it comes back to like e-commerce and branding and all this stuff where you can actually do cool things because they purchased on chain. And so that's also going to be something where a lot of innovation is going to come. Doesn't really exist right now because it's just not big enough yet. But I think that's going to be a huge ecosystem that kind of explodes as stablecoins become a bigger thing.
Well, it makes me think about loyalty programs.
Right.
So right now, in order to get points for a loyalty program, you have to buy through the app, basically. Like if you were at Starbucks and you want the Starbucks points, you gotta if I buy on my credit card, this my Starbucks points don't they don't know that I bought it, right? There's no connection between my credit card and my Starbucks account. So I have to buy on the app, right? But in the future, think about how much easier it would be for anybody to start a loyalty program,
Hmm.
right? Because again, you could say, oh, we want to reward anybody who buys or spends this amount of dollars in our store. It's interoperability is crazy. Like, I don't
It is
think
great. Though I hope because, like, I mean, you can just look at it. Let's say you have the wallet for Starbucks, the wallet for the stores in those specific locations, and you see where all the wallets that are interacting with them. Now you know all the Starbucks customers in Seattle or in wherever. As cool as that is, I also think privacy things will come into play here, and we'll probably get rid of some of that. So it's
for
not
sure.
going to be completely transparent in that regard. I don't know how that's going to work out. That's a whole nother topic, but we're going to need some of that because as much as this is cool and you can give certain experiences and understand customers and blah, 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 it's also a little bit too much, like what if someone's going to the sex store and now all of a sudden you can see what they're buying? That can get a little bit weird. I don't know.
Kai, what did you and your girlfriend do this weekend? What do you get at?
We golfed. Okay. Relax.
Sure, yeah. Yeah, me and Sam call it golf too, man. That's what happens when you get a kid. You got code words for everything. That's a wrap on today's episode. Make sure you check out Wednesday's podcast is with Zen, co-founder of Web3 Auth. Great story talking about not stablecoins exactly, but how Wallet UX is going to bring more people on chain and how it's improving. And he tells great stories from McDonald's and working at the Ethereum Foundation. So listen to that. If you're not subscribed to the newsletter, make sure you subscribe. See you around Twitter. See you around Discord. Have a great week, everybody.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.